You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleague Sonia and Nigel. Guys, hi, good morning.
Good morning.
Should we start with football or markets? I think that is the question, right? I mean, so much news flow to address on football, but I think we can we can get to that in just a bit, right? The point is, at least from a market standpoint, that things are looking back up again. It's just one day, but I think it's important to note that the rallies that we saw overnight were quite brisk. And I think there's something to be said about that. Volumes were low, subpar, as it notoriously is towards the end of the year. So price action reversed globally. So what did we see? Equities were higher, yields were lower, and the dollar was weaker. This was exactly the opposite dynamic of the day before. So it's just a one-day flip-flop. SGX Nifty is indicating a higher start once again. Yesterday, we saw a sharp pullback. And I think, that tells you that impulse to buy is lurking around the corner. It kind of disappeared for a few days. Is that back is the question. We're up about 1/3%, and there's a lot to talk about, especially with the price action that we saw last night, and how much should we extrapolate based off that. Guys, hi, good morning.
Hi, morning. Now we can talk about football, right? What a shocking win. I mean, I actually went and bought Argentina t-shirts because we're supporting Argentina this time around. That was a shock. I mean, great for Saudi Arabia, fabulous. And I think they've declared a holiday as well in Saudi Arabia, right? And you've seen all those videos of people celebrating, but anything can happen, especially in the world of sport.
It makes the Saturday fixture even more exciting, right? Argentina takes on Mexico.
Yes.
So they'll have to put in their best, and they'll, if they want to come back into this tournament, then that's going to be a cracker of a game, but full marks to the Saudi team. From the word go itself, even when they had that penalty, when Argentina had that penalty, even till then, the kind of fight that we were putting, you were bracing yourself for something special, and full marks to them.
And it's amazing to see when the underdogs come up, right?
Yeah.
I mean, people that you least expect go out there and put in a great show. It's such amazing entertainment.
I told my son, just told him after the thing later, and I was putting him to sleep. I said, Saudi Arabia has declared a holiday, like you guys were discussing. He said, I wish I was there. That's from an 8-year-old. So,
Riyadh was the place to be, right? Last night.
And by the way, another piece of statistic, right? Whoever defeats Argentina, at least this has happened in the last 3 World Cups, 2 out of the 3 World Cups actually, has gone on to win the World Cup or at least land up in the finals. I mean, that's just stats. It happened with Germany, it happened with France in 2014, 2018, and it happened once before as well. So, I mean, it's looking good.
It's getting exciting now. This is getting exciting. But you know what? For the market as well, I mean, we're talking sport because there's not really too much action in the market. Yes, the Dow was up 400 points overnight. So in that sense, you did have some positive cues over there. Now, a couple of things to watch out for. There are the Fed meeting minutes that will be announced later today. That will be closely watched for how the rate hike cycle plays out. The US markets are closed on Thursday for Thanksgiving holiday. There's a half day on Friday as well. So the cues are slightly on the lower side as we head into the fag end of the week. For our own markets, FI selling is back. So FI sold 3,000 crores in the last 3 trading sessions alone. Yesterday, there was a sell figure of almost 700 crores, although DIs are buying a bit, but just keep an eye out on the money that's being pulled out by FIIs. In that context, the Nifty seems to be range-bound. The higher level of 18,300 to 18,350 is a bit of a hurdle for now. And there are many headwinds on the horizon that we've been talking about ad nauseum, whether it is the risk of a global recession, potential earnings disappointment, rising yields, high valuations for the Indian markets. All of that put together, perhaps the market could see a lid on its gains, at least for now. Let's see. For starters, the SGX Nifty, though, is perhaps celebrating that Saudi Arabian win.
I mean, looks like it, doesn't it? I mean, the sentiment is up, is strongly rebounded, I have to say that. And the reason I'm saying that is largely because of the dollar. The dollar, which looked like it was going to get up to about 109, go up beyond that, the DXY index that is subdued once again. It's fallen back to about 107 kind of levels. And that is perhaps the single most important cue, even more important than equities in terms of what the S&P does or anything. The dollar is what emerging market, it matters for emerging markets quite a bit. So the S&P was up 1.3, the NASDAQ was up 1.3. The S&P is back above 4,000 kind of levels. This is the first time it's gotten back above that since September. Amidst all of this, Fed pricing has changed very little. So this turnaround has not come through with markets expecting the Fed to do any less. So just one point there. The US 2-year that's the front end of the yield curve in the US, rallied after the New York cash markets closed. And the reason for that is this comment coming in from, one Fed representative, the Kansas Fed president. And she had this to say, and I quote, ample US savings will help to buffer households, but could also mean higher interest rates are needed to cool spending. So point is that all of the COVID savings are still there. The consumer is strong in the US. So it's very unlikely that we'll be able to do anything on the other side very soon. Higher rates are needed to cool spending, cool the economy down. So this basically came through post-New York close, and yields reacted on the upside. Markets are known to be illiquid through into the end of the year, and for all practical purposes, for many in the market because of holidays, etc., it's basically more than a few weeks actually. But we are heading into the end of the year. Markets get illiquid. It's been that way, yesterday, day before, and I think, successively it'll get more and more illiquid. So any price action is likely to be exaggerated. It'll seem exaggerated. There are FOMC minutes later today, which we will get, and then tomorrow you've got a US holiday as well. So it's a holiday shortened week. Just a quick point on the market here. The Nifty did not break the 20-day moving average, which is the level we were watching out for. It got to about 60 points of it, but we never tested it. We never broke it. So that should sort of give some confidence that still holds as a strong kind of support. If you are inclined that way, then the 20-day is your marker between, bullish zone and bearish zone. The 50% retracement of the recent fall, the small fall that we've seen, is 18,287, 18,290, 18,300. I mean, those are zones which are not very far away, 60 points or so from here. So that becomes the first kind of resistance. On the upside, 18,400 kind of levels come into play, which we've gotten to before the market kind of turned down. The first kind of support before the 20-day comes into play will be 18,130, which has been the low, around the low for the last two sessions, yesterday and day before yesterday. So, good if that is held, will add more confidence to the bulls. Nigel, what are you watching out for?
Well, 2 points I want to track. One is, does the Nifty have enough in it to get past that 18,350 to around 18,450? And for now, the headline index is going up well. The problem is the broader markets are not really participating. Yes, there are a few stocks that are moving up, but just take a look at the index. Yes, the Nifty had a splendid close, but the small cap index, well, it was more or less flattish by the time we wound up in trade. In fact, it ended mildly in the red. So the breadth of the market isn't that great. You'd like to see that, come back up. And that's what makes a lot of portfolios look much better. So broader markets is something I'll track. But since we look at the headline index, let's track a couple of cues coming in there. The cash market data, the FI and the DI numbers, well, they cancelled out each other. In the F&O market, the FIs, they added some long positions and they got squeezed out on the short side. So some of those short positions did cover out. Remember, we have expiry tomorrow, so that's going to be crucial as well. On the writing side of things, well, called writing was something that had gripped the market in the previous two sessions. Yesterday, some of those called writers, they had to run for cover, and you saw put writing, which is always a good sign in an uptrending market. And the 18,300 call, 18,400 call, between them, well, there was a lot of shedding. Close to 25 lakh shares were shed out there. However, that continues to be a resistance because at both these two strikes, there's 1 crore shares each in terms of open interest, telling you that the bears, they're still protecting that level. So if you're going to gap up, you'd like us to trade above that 18,350, and you'd like to see unwinding at around this 18,300 call and 18,400 call. Moving to the put writing, encouraging yet again. 18,150 put, 18,200 put, both of them very active. Between them, they added close to around 65 lakh shares. So that's giving you a sense that at lower levels, the bulls believe that they're going to buy around 18,100 and make some money. Crucial levels to track then, yesterday's low becomes a level of support. You also have the 20 DMA, that's at around that 18,100 odd mark. On the upside though, 18,350, it's been a bit of a hurdle. The range itself has been a bit of a hurdle. So with the SGX Nifty gapping up, well, buying the dip seems to be the prudent strategy. Don't chase the opening because that's worked for the last many sessions. What else, Sonia?
Oh, absolutely. And the thing is that there are no major positive triggers as well, right, for our markets going forward. So to get above this level of 18,400 would be very interesting to see what leads to that. Towards the end of the year, the volumes also dry out a little bit. So perhaps we could just be in this range. You never know. Let's see. For today, there's green on the screen. By the way, there's a big game today as well, right? In the evening, Germany, Japan.
Wow.
And that's going to be interesting because...
Will we get another upset is the question.
If that comes
Too much
through. And Japan is sort of one hard side. I don't know if you guys saw that viral video of them cleaning the stadium, right?
You know, but the way Asian football is evolving is something that, that I'm liking, actually. Yeah. They're putting in a fight. Prashant just spoke about his son, talking to him. I remember sitting on my dad's lap, in the 90s. And there was no much fight that you used to look forward to. Now that you're interested, the Asian players, the Asian teams, they're putting in a fight. And it's not a walkover, so to call it. Yeah. So I'm quite encouraged with the Asian football culture getting developed out there.
Oh, absolutely. This is going to be a good game, especially after the shocker that came through yesterday. Let's see if there's another big upset today. Okay, that's about sport, but let's get back to the equity markets because we have lots to track today. On the equity front, first up, we have a comment coming in from Rupal Agarwal of Bernstein, who says that peak inflation, China's potential reopening and falling dollar has helped the market sentiment. However, risk of a global recession, potential earnings disappointment, rising yields and extreme valuation dispersion is hard to ignore. They expect the markets to remain volatile and recommend being cautiously optimistic. They are sticking to defensive exposure through high yields, low volume and high quality stocks while tiptoeing back into beaten down names for China. Bernstein likes the policy support areas along with value exposure, while for India, they prefer high-yielding names.
All right, let's get you some money market views as well. This is Kunal Sudani of Shin & Bank, who says that market participants are eyeing the release of the November FOMC minutes today, which will offer a glimpse of how officials view economic conditions and, in turn, a direction to rate trajectory and dollar index at large. Kunal says concerns continue to prevail in China with rising COVID cases, while Brent crude has bounced back. For the dollar rupee, he says 81.50 acts as a support, while 81.90 is a resistance.
Okay, and on the bonds today, Neeraj Gambhir of Axis Bank says that the market traded in a range of 7.25 to 7.35% on the 10-year yield. The market for the rest of the week will take cues from the FOMC minutes and oil prices in the absence of any significant local cues. He expects the 10-year benchmark yield to continue trading in the range of 7.25 to 7.35%.
Well, that's the money market calls, but we have a lot of stocks to track for you. We'll get to that in just a bit in our special Top 10 segment. We'll look at Vedanta, Adani Enterprises, Z Entertainment, Aether Industries, DCW, Keynes Technology, as well as Max Financial. They are stocks on the back of positive news flow. However, you have Siemens, Nycam, and Oro Pharma. They are stocks that could possibly open up in the red.
Okay, well, lots of stocks to talk about. Let's do one thing. Let's take a quick commercial break. On the other